Tesla came in with certain earnings. I think it was about billion. I did have them up here. There we go. APS of 1 expected, and they surprised with 5.23%. But revenue came in lower. 21.8 billion expected, 21.45 billion came in at the end. This is on top of the news that deliveries didn't come in as well as they should have. This deliveries being Tesla's closest reporting of sales that they actually give us on cars. Possibly signaling that demand for Tesla's cars is not as strong as we first thought. Your thoughts, firstly, on demand for Teslas, China, if you've got anything, and just your opinion on Elon at the moment.
Okay, so I'll start us off quickly then. I don't follow Tesla as closely as I kind of once felt I had to, so I started looking into this kind of over the last couple of days, knowing these kind of earnings were coming. As I understand it, the thing about deliveries, this explains their kind of slight miss on revenue. Deliveries came in light, so revenues were slightly under. And as I understand it, that was kind of known about or mentioned ahead, so it wasn't a huge surprise to the market. The real question becomes kind of why. And there's sort of two lines of thought, I guess. One is the official party line, if we call it that, the kind of reason Elon Musk gave, which was concerns about trying to ship the damn things and problems with transport, effectively. Okay, that's one reason you might have not logged deliveries in the way you were hoping to. The other is maybe people just don't want them as much as they used to, or demand isn't quite where they thought it was. Musk was keen to talk that idea down on the earnings call, from what I understand. I haven't actually listened to it, I'll be honest. But that would be a bigger kind of concern. China's zero COVID thing, I understand, has not been helpful, but they did, I think, still manage kind of record deliveries this quarter, as they seem to kind of nearly every quarter, with increasing factories coming online and production and so on and so forth. They're still confident they can sell everything they can produce and plenty more. I wonder, in this case, this feels a little bit like another stock we're going to talk about, where perhaps people are suddenly expecting the worst, and they might get pleasantly surprised if they're shareholders in a couple of quarters' time.
That would be my general take. There was nothing wrong with these figures. They just went as high as they sort of projected they were going to be originally. That was my sort of net takeaway from Tesla. And when you are a stock that is as overvalued and priced to perfection, like we've mentioned on a number of occasions, when you don't achieve perfection, then your share price comes down. And I think that's kind of what's happened here. They look still profitable. The gross margins look very strong for a car company. Well, all car companies are improving their gross margins at the moment. In fact, car companies are getting very comfortable with not making as many cars as normal. But Tesla are the opposite. They're making a lot of cars with a good gross margin. They're making as many as they can sell. It looks okay to me as far as I could see. The only thing that really caught my eye of the whole thing, well, apart from Musk's take on economics, which was quite interesting, he said China is in a property recession, Europe is in an energy recession, but North America is okay, although the Fed is raising interest rates more than they should, and they will realise that shortly, he says. The other thing caught my eye was Tesla's going to do a buyback, he reckons, next year, between $5 and $10 billion. Now, I think that's a very poor move. If you're making as many cars as you can sell, you need to be making more cars, and that's where I think that $5 and $10 billion would agree. Go on, Steve. What do you think?
I think it's a really good idea. I think if I were in charge of Tesla and I potentially had to sell some of my shares to go and buy another like social media platform or something like that, I would want the company to buy them back a bit quickly, so the price might go up a bit.
Like Bieber.
Yeah, this is the thing. I actually want to look at the business here, and I agree with Steve D. I think the share buyback is a really bad thing. But on the other hand, Tesla is so driven by sentiment still that a share buyback should really have put a little bit of steam back into the stock, but it hasn't, and I think I can tell you why on that one as well. But it's because the Tesla all the fans believe 100% that you should not be giving back to the shareholder. They believe that you should be ploughing into the business, and if a business is not ploughing all its money back into it, it's not growing, and it's not going to continue growing. Unfortunately, that is the FinTwit line on this one. It doesn't matter.
One of those yucky dividend stocks.
No, it's more that I think you're right. I think it's everything that Elon Musk seems to do is to cover up something else. That's what I see. If there's some bad news coming out with the companies, lower deliveries, China upset with them, he brings out a robot that's half finished, or he tells everyone that the semi-truck is coming out in December, which it possibly might not as well, which is another thing. We have been delaying these things for a long time. I don't know. It's driven by sentiment. I've said it for a good couple of years now. This price will mean revert. It will come back into reasonable alignment, and I think it's starting to do that.
Yeah, I mean, the other thing he does, by the way, is split the stock occasionally to try and distract people from what's going on. Is a kind of another favourite Tesla move. But I take your point. I mean, it's not. We are talking a lot about cars for a company that, a year and a half ago was only sort of partly a car company and was mostly an energy company, and is now a humanoid robot company. And it strikes me as kind of surprising that they're generating so much cash that even Elon Musk can't think of a kind of meaningful use for it. Because if anyone has the kind of vision to see growth opportunities in stuff that might be kind of orthogonally connected to green energy generally or something like that, I would have thought it was him. So I guess I find it surprising, or maybe less surprising if you consider the reason I gave before.
Absolutely brilliant earnings report, though. This company is growing so rapidly. I do wonder where the ceiling is. You still need to think like that. And every time that something happens with these deliveries, you have to ask yourself, as a valuer, as somebody who has valued Tesla at 3 trillion, something like that, maybe it's now only 2.5 trillion because it hasn't quite fit the narrative as well as you expected. Maybe it's going to be 2 trillion next year, and things start to come together a little bit. Tesla, is it anywhere near close to you guys buying yet?
No,
No.
But not because of valuation reasons. I mean, if you think you understand this area better than I think I do, and that's not very hard for what it's worth, I think it's now slid below what Morningstar considers to be their kind of fair value estimate for it, because they basically held fixed on these numbers, which is, I think we all think, is not crazy, to be honest. That the numbers by themselves shouldn't really change your view of the thing. Okay, there were slightly fewer cars delivered, but broadly speaking, the thing appears to be on track. So they're saying no change to their fair value estimate. It was trading around there before as a result of the general market coming down, and it coming down faster than the general market. Lost another, I think, around 7% today from where I looked, which does mean that, according to them, it's underpriced. Not as underpriced as other things, admittedly, like, say, ASML. But they, put this way, they're a kind of professionals, and professionals I consider to be fairly sensible here, who think this is an unjustified move downwards in this stock.